Hello and happy May 10th, Mother's Day in the United States. Happy Mother's Day to everybody as we come together to go over what happened in the stock market this past week, what may happen going forward. And again, welcome to my favorite people, those that follow my trade ideas and my technical analysis. If you find this useful, please like, share, follow, send it out to people you think might benefit as we try to grow this following. Um, yeah, and just again, guys, as a certified research analyst, these are my ideas and my trade plans and what I would do with them. Please do your own due diligence. Try to follow along. Try to learn as you do it. You can always reach out to me. I offer a lot of courses where you can learn to do this. But trading decisions need to be yours, as trading in general incurs a lot of risk. So, without further ado, let's get into it, guys. So let's talk about first what happened in the past week in terms of catalyst. We had a strong April jobs report. The U.S. economy added 115,000 jobs, comfortably beating the consensus estimate of 55,000. While unemployment held steady at 4.3%, this validated the soft landing narrative and highlighted economic resilience. The Middle East de-escalation optimism surrounding a proposed 14-point U.S.-Iran diplomatic framework caused crude oil prices to pull back significantly. Brent crude tumbled early week highs from 115 down to about 101, and we'll actually get to the full numbers in the report here. Easing some near-term inflation fears. But it does raise the question, are we going to have sticky inflation with the bottlenecking from this? And these are things we're going to monitor over the coming weeks. Tech and AI earnings reports, first quarter earnings continued to fuel the rally. The technology and communication services sectors posted year-over-year earnings growth of roughly 50%, driven by sustained artificial intelligence and cloud computing infrastructure investments. We had fluctuating bond rates, or bond yields. Easing energy costs initially sent the 10-year yield down to 4.33%. However, yields rebounded to close the week at nearly 4.38% as bond markets digested the surprisingly robust jobs numbers. And then mixed consumer resilience. While the macro economy looked strong, individual corporate reports showed consumer stress. Whirlpool shares plunged 14.5% after reporting weak quarterly results and announcing 10% price hikes to offset costs, highlighting softer consumer confidence in discretionary items. I mean, I know personally, I'm paying a lot more for gas. I'm paying about 30% more for groceries. Anything related to protein, especially beef, is extremely high. How's it doing in your area? Let me know in the comments if you would, because my consumer sentiment is not good. What are we looking forward to in the coming week, guys? Potential market catalysts coming as we have the U.S. Consumer Price Index, or known as CPI. Investors will heavily focused on the latest inflation print. Following last week's robust jobs data, any upside surprise in CPI could spark fears for a higher for longer narrative in the interest rate environment, which will weigh heavily on equities. U.S. retail sales data is coming out with mixed signals from consumer-facing companies from last week. The official retail sales figures will be critical for gauging the health of American consumer and the willingness to spend in sticky prices. And like I said, with the normal consumer goods that we are taking in, prices being higher leaves less for other consumables. We also have the next wave of tech and semiconductor earnings. The earnings spotlight will shift to networking, cloud, and semiconductor equipment. Key reports to watch this week will be Cisco and Alibaba on Wednesday, followed by Applied Metals, or AMAT, on Thursday. We'll keep an eye on those earnings reports. And then geopolitical formalities this coming week. The markets priced in significant optimism last week regarding the diplomatic resolution in the Middle East. Any official confirmation of a peace plan, or conversely, a breakdown in talks, will cause immediate violent swings in the energy sector and broader indices. Remember, violent swings in oil create violent swings in gold, right? As well as the broader markets. So, as I've said for weeks since the end of February, it's a very tweet catalytic environment right now, depending on what Iran says, what Trump says. And then Federal Reserve commentary, perhaps this week, following the inflation, retail sales data, commentary from the Federal Reserve officials will be heavily scrutinized. Markets will be listening closely for any hawkish pivot regarding the timeline for rate adjustments. All right, guys, those are the catalysts. Let's get into the charts, shall we? Um, we'll get you shared out. All right, guys, let's talk about this. I dug into um, this run in NAS. Now, NAS is our tech heavy uh, indice. We have ran from 22,700 and some change all the way up. We peaked at the all-time high right around 29,300. That, guys, that is a 28% run. So volume is supporting this run. You can see that volume is supporting this run. The throwbacks are high volume, but buyers step right in. Now, I'm going to talk a lot about the NAS as the leading indice, but this is going to hold true for the S&P and the Russell and for the New York Stock Exchange in general. This Gann angle, which is the work of W.D. Gann, measured the markets for what a healthy movement on a trend would be. And without getting deep into the weeds, a normal rate of acceleration is one unit of price for 1 unit of time, imputing roughly a 45-degree angle. Now you have to make sure your charts are correct on that angle, as these are not, but you're going to get the gist. When I actually go and measure this, I have to change my charts to make sure that we're getting the correct angles, because this is skewed based on the movement so that it fits in the charts. Now, rate of acceleration has just been a 45-degree angle in a healthy trend imputes about 100 points per day on average upward. So, in other words, if this thing ran on a healthy movement, something like that, about 100 points per day, some days 200, some days negative, you get the idea, up and down with an average of 100 points per day. Right now, I've written the numbers down on this for you. We're averaging nearly 300 points per day on average in this run since the end of March. Remember, I said a healthy Gann angle is approximately 45 degrees. We're about 73 degrees. Can we continue to go up? Yes, markets can remain irrational longer than you can remain solvent if you short this. But this 3 times acceleration has some extreme warnings listed in it. While the momentum is historically strong, the angle of ascent is dangerously steep, making this index and the others like it vulnerable to a sudden, sharp reversion back to a correction. Some would say an additional spike would be a blow off top, and I think that number might be around 30,000. All right, so I've said it before. If you've watched this report, I strongly believe we're going to be back at 26,000 at some point. This was just strong resistance for so long, and we blew through it, and really never a decent test back to it. So dropping back down to 26,000 and is a 10% correction. Is it going to happen this week? No. Is it going to happen next week? I don't know. I don't know, guys. It's just very dangerous right now. Very dangerous right now. Be careful, right? SPX, so SPY. I did some interesting things. Again, it's a very strong movement where the NAS has the strongest movement with tech being in it. But I ran a Fibonacci from the drop to its previous all-time high at 7,000, giving it the one full unit of movement. Interestingly enough, and if you followed my work, the 1.168 is a great predictor as a fib extension of where pricing may be headed when we're in new pricing zones like we are right now. We closed at an all-time high in the SPX at nearly 7,400. Well, 7,428 is the 1.618 fib extension. So we could be coming into some resistance here soon. Certainly 7,500 is to consider. So if we combine those two numbers, we might hit a resistive field right here. Read another report, guys, that the PE ratio of the S&P 500 as it is right now, and I forget the numbers, it's in the 20s, right? The forward-looking and backward-looking PE ratios. That if you buy now, that you will have a negative rate of return for the next 4 to 5 years. Take that information for what it wants. What I'm seeing happen in these indices and in the market in general is going to be a function of, it's going to be one of two things. Either we are experiencing a blow off top or a bubble that will have a blow off top that sells us down, right? We have so many analysts and experts screaming that. Or this truly is a new market and a market reset, right? Where all baselines and all measurements will be changed. We will not know that correct answer until one of those two things have happened, folks. So again, if you follow me, I've been just telling everybody on this run to be agile, and most importantly, make sure you're sitting in some cash for if this bubble bursts, when it pops, the people who have cash to buy in on the pop will be the wealthiest people 4 to 5 years later, right? So consider that. The Russell 2000 running that same Fibonacci to this previous high on the run says that we're going to head up to 2,900 as our fib extension. So again, and I've been on record saying, if you remember, I'm on social media, YouTube and Instagram every Monday through Friday, 9 a.m. Eastern Standard Time for 20 minutes, where I'm doing a free live market report. You can join me and ask questions, and I answer questions. I think that's our resistive field, guys. The fib extension to 3,000 is what I'm predicting. So again, 70, close to 7,500 in SPX, and between 2,900 and 3,000, definitely 3,000 and 30,000 in there. I'll be placing shorts there, especially when the NIMO and NAMO oscillators are oversold or overbought. If they're overbought at that point, hitting those key numbers, I like that confluence for high conviction shorts. And if for the folks that follow me, I'll let you know. All right. Bitcoin. Nothing has changed on this, guys. I don't see this as a run up. There's been a lot of experts that say that the cycle low is in and that we're going to run. I don't see it. We will not break that all-time high, in my opinion, at around 100,000 or the 100,000 mark, and that red line is the all-time high anchored VWAP. I said that I like this buy between 59 and 60,000, following the few crypto experts that I trust, as well as with my analysis. Crypto John, one of the experts that works with me, says cycle low 50,000 in October. Take it for what it's worth. I just don't trust this bounce in Bitcoin right now. All right, let's get into oil. Guys, oil has been oscillating in and around this gray box represents the oil shock gap that happened February 27th when the war kicked off. And we're just bouncing around in there. The key numbers to keep an eye on is the all-time high anchored VWAP at 84. I see that as a buy as long as there's not resolution in the Middle East. And then people ask me, where should I short? Short this all-time or this recent high off the oil shock at about anywhere between 111 and 113, and then ride it back down. There is opportunity for faster shorts with tighter stop losses at 100, right? And then buys at 84 as you play shorter term swings on this. All right, and I put that information out pretty much daily in my morning market report on social media, so you can follow me there because it's just been up and down so much. All right, let's get into some of the stocks that we're following. Google, guys. Look, interestingly enough, I did the same thing with the fib to match what I was doing in the indices, and we're right at the 1618 and the 400 level. So this will be interesting. And if you followed me long enough, I called Google the winner this year, right? I said it probably wouldn't be NVIDIA, it'd be Google. But I see this as the resistive area because we have a confluence of the 1618 as well as the key level price of 400. I like this gap as a buy. Be patient here. I think we get a retracement Um, this market structure would provide great support at about 350, and then the top of the gap 371. If for some reason we have some negative catalyst, it's a buy all day at 300. And folks, if you followed me long enough, I called that buy at 300, and you're welcome. It's at $400 now. Microsoft, nothing yet, right? From last week's report till now, I still like the IPO anchored VWAP buy and run it to the all-time high. So buying in around 320, selling in around 450. Be patient. We do have some market structure support in around the 350 to 360 zone where you could size in. It is just running sideways now. So when it does that and it is the middle of our trade plan, we just sit and wait. Oklo on the nuclear thesis. Congratulations. We did call this a buy. We had a number of traders get into it. And I recommended that when it ran in 50%, you go break even. Anybody holding this right now should be at break even. Even anybody that bought between 54 and 59, you need to have a break even stop loss as we sit at 72. We are targeting that all-time high anchored VWAP at 90. This was a plan that I gave everybody to buy. Then if you've missed it, the next opportunity is still buying at that IPO anchored VWAP in around 59 and some change. I'd give yourself a dollar buffer to get in. Or once this all-time high anchored VWAP is flipped, so price goes through it, flips and confirms, that would be another buy signal that we're probably going to run into all-time highs for the nuclear thesis, right? So if you own it now and you want this to happen, just maintain your break-even stop loss. Once it flips the all-time high, I would lock in 50%, or we'll be on top of the report. I'll recommend where you can even raise the stop loss more. If this scenario happens, we will get the golden cross where the 50 EMA crosses the 200, which is an institutional buy, right? Institutions wait for that buy signal. So if that happens and institutions pour in and you're already a retailer ahead of it, you'll be well into the money. All right, M&P Metals showing a buy signal here off of this all-time high anchored VWAP. We had talked about the IPO anchored VWAP buy, which never was realized, and that's fine. You must have multiple trade plans in play. This is a buy signal. So if you didn't get in, your buy is going to be between 63 and a half and probably 64 and a half, and run that back up to the all-time high. You can have a protective stop loss right below this consolidation zone of, we'll call it 59 and a half. Do your own due diligence here though, but that's M&P Metals. BBAI is looking better. I did want to buy it down here once I did get kicked out on it. But buying in this zone between 350 and just a few pennies over $4, you could buy that with a stop loss just below the swing of a dollar. So you could buy now, stop loss a dollar. Two price targets for you guys. One, the IPO or the all-time high anchored VWAP at 576, or right back up to where to 8, 9, and $10. So there's BBAI. Currently looking like a buy. You can have a dollar risk and then try to run that up. Pony is not looking good, right? Also in the AI sector. This is a uh, no-go right now, and I'm looking for it to come down and test $6. We do have market structure support at 825. IPO is over top. So this is a no-go. We want a greater discount, and that may occur here at 4. I did set an alert at 6 as price drops into the zone that I'm interested in. So be patient, folks. QBTS looking great. Of course, I owned it. It kicked me out right there and then chose to run back up about $10 per share. And I owned a lot of this, but I did make 300% on the trade. Yeah, this is the trade plan that I put out. I had a lot of traders enter this after being stopped out on this drop. Bought again at a discount in around 14, where I called the buy zone in these reports, and then run it to the all-time high anchored VWAP. Right now, guys, you need to be break even. And if you want to lock in some money, you could be up around 17 or $18. Run it to that all-time high at 25. That's $10 per share. That is a phenomenal gain. If you bought there and then sell there, that's a 72% gain on your money, right? Called right here. on these reports. If you want to try to hold it through there, I would stay in around $19. Let this resistance play out as it flips at, and then we have market structure back into all-time highs if you want to stay in the trade. And as usual, guys, you can always message me and ask me, say, hey, I'm in this, I need a trade plan, or I need help where I should put my stop loss, right? A lot of times when I ask you questions and not just give you answers to help lead you into it, but reach out to me, folks. IonQ is looking good. We called this a buy off um, the IPO anchored VWAP, right? If you follow my reports, if you follow me, we called that a buy. Initial stop loss was out on this pivot low, and then now that we've um, once it went into the money, I recommended a break-even stop loss with no risk, and the trade plan. Congratulations, completely paid. IPO anchored VWAP to all-time high. For those folks that took that trade, you realized 52% gain on your money. Now, it has flipped. This is a new buy signal, right? 2-day close filter above critical support resistance. Okay. You can now buy in around this area, and then we start hunting market structure. TP1 at 65, TP2 all-time high on up there. Stop loss right below this pivot swing. If you bought down here and you're like, Sean, I want to stay in it, your stop loss goes right below this pivot swing at 39 because we may get some turbulence right here. Otherwise, if it runs a little bit more, stop loss at 45. Again, reach out if you need help. Congratulations for those that bought it. QUBT trade plan did not hit. We were looking for the discount down here. I don't see a buy or a sell in this one yet. We have the IPO over top and the all-time high anchored VWAP over top for resistance. A lot of resistance overhead as well as market structure. So a couple things have to happen. We need to flip these and or get that magical golden cross where this purple line crosses the burgundy line known as the golden cross. So, or the deeper discount. So right now it's a wait on QUBT. Quadruple U is a buy. We did have a pretty strong sell-off here of about $4, but not to worry. This second all-time high, and actually the all-time high anchored VWAP is right here around 21. I think that buy zone is still 20 to 2150. So we are back into buy zone where this trade plan that I gave you is still active. If you want to get in, and this is a good opportunity, you can have your stop loss right below this anchored VWAP. Okay, we'll call it at 19 to see if you stay into the trade. And again, I've broken record on this. Price target is the lip of this bowl or lip of the cup because this is a cup and handle at 28 is TP1 and then higher above that. So there is opportunity here. This is nuclear energy, which is a strong thesis in this administration. Ego, let's look at some miners. Buy plan that I put out activated. We're currently in the buy plan. We are targeting that all-time high anchored VWAP up there around 37. Now that we're more than 50% in the money, you need to go break even. All right. Zero risk this trade as it gets close to that. If you want to lock in 50%, do so. If you want to, and then stay there if you want to wait till that all-time high anchored VWAP breaks. Right. But I think that's a great TP1. Guys, if you follow my reports for weeks and weeks and weeks, I've been saying IPO to anchored VWAP to all-time high anchored VWAP because that's what the market is presenting to us. HYMC, the trade plan here has not hit. This was actually placed in after it gave this. It came close, but buy in around the 31 to 32 and then try to run that back up to all-time highs. And do you notice this red line is the all-time high anchored VWAP where it is fighting with it? So I think we can demand a discount here. If it does flip that, your next long play is once it closes above that and then run it up, right? So you're going to see that line, let it close above, kind of like it did here. This would have a similar trade plan here if you were late, depending on your risk, would have kicked you out. I didn't recommend it at the time, but this is a buy signal, unfortunately, that would have, I don't know that it would have failed. If you would have had wider risk because of greater reward, you might have still been in this trade. However, that's what we're going to look for moving forward if that flips. All right, so let's talk about IRINN. This one is gave a buy signal right off that I put out for everybody, right off that all-time high anchored VWAP. Remember, when we flip the all-time high anchored VWAP to the positive side on a 2-day closed filter because we're using a daily chart. That is a buy signal. So, and you can front run that by buying and adding. So this trade plan is already paid out because we were hunting this market structure. So congratulations if you bought this trade plan. I talked about this one specifically in Zoom with a couple of my groups. Those folks that took that trade got paid in 1 week. If you're still in it and you want to hunt it, we need to go to the next market structure and the next high. But you need to be break even. And as price pushes up, we're going to trail it right up here. We're going to have to get about $55. If you have specific questions, let me know. If you haven't bought it yet, you need to be patient. Let's look at the metals. Gold. Guys, my buy in this that I stated, buy in at 4,500. You're going to be happy because we're going to run that to the all-time high anchored VWAP. Look what's happening here. Get rid of this fib so you can see it. I called the buy here, and it sat 1, 2, 3 days of opportunities for you guys to buy that, right? All-time high anchored VWAP at 48.31. It will not flip that VWAP on the first attempt. So that's a great TP1 because what happens is price is probably going to come down. Let me get a new tool here. Let me find it. Well, maybe I can find it for you guys. I should have memorized where they're all at, but I don't. I'll just draw it. We'll just do a drawing. So as price runs up there, hits that, it's going to pull back. That would be your next opportunity to get in, right? Don't leave that money on the table unless you're just like, I'm buying and holding this for eternity. I'm just going to keep it until the year 2700. Okay. But put a break-even stop loss in for me. Will you guys do that? Too many traders that I have experienced and worked with leave so much unrealized profit on the table. Like you guys that bought this gold at 2,400, watched it run to 5,600, and then watched it pull all the way back because you left all that unrealized profit on the table. Guys, you got to pay yourself for being right, and even if it's only a partial exit. So if you need help on trade planning, I do offer workshops for that. I offer private lessons. You can reach out. It is a paid for service. But guys, once you learn this information, it's like seeing through the matrix. You can always reach out. I offer private lessons as well as courses. Silver. Okay, tale of several numbers. This hasn't changed for me. 71 below that 64, below that 54. But this all-time high anchored VWAP that I've told you about that previously was at 80, it's sloped down a little bit. It's at 79.50, has flipped. This is a 1-day closed filter. So if you wanted to be aggressive on the buy, you could buy in around here with a stop loss. I would say a couple dollars and then try to run this back up to market structure at 99 or 100, or I'm sorry, 96 or 100. If you want to be conservative, wait for it to close above that for a second day. So, but I have read analyst reports of big banks that have down rated gold in their price targets. Previous price targets were a little higher. They've moved it by $10, which surprises me because I don't necessarily agree with the overall fundamentals. I think silver has a very high potential, right? I'm not trading it in futures. I'm buying it in as a real asset. I've been buying physical silver for 20 years. I bought it 20 years ago, buy it every year, buy it often, bought it as recently as last week, guys. So I've bought it at $8. I've bought it at $98. Right? Just buy it. All right. So platinum, this trade plan in platinum that I called paid beautifully, right? I called this 1900 and then sell at the all-time high anchor VWAP at 2000 and some change. I said you get 100 or 200 points out of it. Number of traders traded it and realized their trail stop, whatever, however many points that was. The next great buy signal will be flipping that all-time high anchored VWAP. So keep an eye on that. Palladium trade plan has been triggered. We're targeting that all-time high anchored VWAP. Depending on when it ran up, if you went break even, you probably got a break even exit. If you need to tighten your stop loss, I think you need to be down here around the $1,415. And our exit will be up around 1,600. So that trade plan is still active. Otherwise, wait for that to flip or market structure to be touched below. Follow me. I'll be on top of it. Copper is moving. I called this trade plan this week and guys killed it. Said to buy off the all-time high anchored view up. Do you guys see the redundancy in my report? Because these metrics and these measurements and these technicals just don't fail, right? So I said buy between 575 and 585. This is recorded in the groups I'm in. You can say, Sean, you're making that up. Go look at the recording and make it up. Now, the one thing I was wrong on is that I had a price target between 605 and 610 as an exit on a shorter swing. It blew through that. It did hit that and pull back, right? So that I was accurate, but it blew through that. And now, if you're still in it, I would raise your stop loss to about 595, locking in 20 cents, and then try to target this all-time high at 650. If you haven't bought it, right, next buying opportunity on discount, this red box, since it's flipped as resistance, is now green as support. That's your next buying opportunity. We'll call it 595 to 605. But I wouldn't go full goose bozo, which means throw all your money into it. You can buy partial there and then buy partial there down still because that all-time high anchored VWAP is still in play. Let's get into a few of the wartime things. ITA hasn't hit my area of interest yet between 200 and 210. We're monitoring it. Shield is falling through a potential area of interest. This wasn't a buy zone, it's a potential area of interest. The buy zone, I believe, on this global X defense tech stock ETF is going to be right around $62 and a buffer around that as we fall down due to the potential breakout of world peace. So, but that IPO would be a buy, sell at the all-time high. Have you heard that before? Palantir, the most evil company that exists, but we'll try to make money off of them. Buy zone triggered here in around 126, looking to sell at the all-time high anchored VWAP. It did pay nearly the exact position or about 90% of it, so you should be break even now. If you're not in it, I would still watch this 125 zone with an exit around 157. This would be a good long-term hold. Man, if this thing gets down to 90 to $100, buy it. They are so deeply embedded in the US government and everything they touch. Not only is it pure evil, but it's here to stay. XOP, gas and oil exploration, buy plan has not paid out. It ran up and pulled back. I still think it's a good play. It's actually in the second potential buy zone at 164 and then run it up the market structure. If you want to wait right now, you can. For those folks that bought it about 2 weeks ago off my call, congratulations. If price increases here, I would move your stop loss up to about 161, start trailing it upward. And then I have the newly recommended longer term trade for you called LINN. All right, let's get into that. I talked about it last week, but I'm going to put it in the YouTube report this week. All right, LINN. This is one that I found in my deep research. It's in the home building sector. And it's underpriced with a trailing PE of approximately 12.8, which is amongst the lowest in the S&P 500 as it's running. And the dividend yield is 2.3%. I'm going to get into that in a second. Historically strong and cyclically proven performer with big up years. 65% in 2023, 52% in 2021, 42% in 2019, with multi-year revenue earnings growth tied to housing demand. Strong balance sheet and land position support long-term outperformance in recovery cycles. So I like it as a buy. Now let me here where it's sitting here in market structure. So anywhere from 77 to 87, and you can just begin sizing in. Now even if, and then we would target the all-time high anchor view. Now this is a weekly chart, so this is going to be a longer-term trade at about 122. So that's a lot of upside. If it turns in our favor, that right there is a 45% gain on your equity. But here's the most beautiful part, right? This thing for every buying it at, we'll say dollar cost average of $80 pays 50 cents per share dividend. That's a pretty good dividend. Ultimately, you want your swings, guys, to roll up to swings that just sit and cook. So even if this thing runs sideways, I'm going to be paid to hold it. And as it appreciates, I'm going to be paid to hold it and the price appreciation. So this is the type of stuff that you need in your long-term portfolio. And it's the one I found for you this week. It's LEN. So again, this is not one that you're going to message me every other day going, hey, is it in the right spot? No, we're going to talk about this monthly, right? This is one that you're going to just hold for a while. And as I find more of these, I'm going to put them in my report and to keep you guys happy. Well, our time's up, guys. It happened very quick. If you would, I'm trying to grow. Share this out to people who are like-minded, who want this information like you do. Let them know about me. And come find me on Instagram and YouTube at 9 a.m. Eastern Standard Time, Monday through Friday, with questions. It could be about these tickers and other questions. You got me for 20 minutes where I'm going to do a quick report and I'm going to answer your questions. All right, guys. Happy Mother's Day. Have a good rest of your weekend.